Well, let's talk about gold. The gold prices will come up on your screen in a minute. In fact, yesterday also, after the Greece news came, there was a minor rebound. In the first couple of hours of trade today, the gold prices were trading on the stronger side, almost 65 rupees on the higher side in the first hour of trade as far as gold MCX goes. That's the international price for you, lower by about $2, but MCX prices will also come up on your screen. So it was the first half actually was on the stronger side. Let's see how it has actually panned out. Look at that. It opened gap up and then kept on sliding lower and is trading at the lowest point of the day right now. Not only gold MCS, but silver will also come up. That's the 7-day graph edging almost lower. It's a kind of a trend. We'll talk about all of that, but quickly pull up the silver prices as well. That also mirrors gold. In fact, in the morning, silver also traded, opened higher at least. That's the 7-day graph for you. I assume that silver also is trading lower on MCX in today's session. Well, we have a guest also joining us on the show, Renisha Chainani, commodity analyst at Edelweiss Financial Services. Renisha, good evening. Thanks a lot for joining us. Let's talk about bullion first. The way the prices are trending lower, is it a sell on rallies according to you, gold?
Hi, good evening. If you look at bullion prices from last 3 days, we have seen that prices have come down 3 to 4%. We haven't seen any safe haven buying coming in because of Greece debt crisis. And in fact, it looks like Greece could come up with any of the solution or any of a deal, because if you look at the euro-biz spread and also the TED spread, which are important indicators to look at to find out whether what would happen in future for Greece. I think they are showing there is less volatility there, and I think there could be a deal that could come in before 30th of June, and Greece could hold on and be there in the Eurozone for a time being. So I think gold and silver prices would continue their downside for a time being, and they are trading at their important support levels. For gold, $1150, if it is broken, then I think we are going to see prices like $1,050 in coming days, in next few weeks only. And even if silver breaks $15 support, it could come down to $13.5 and $14. So overall trajectory is towards downside, and sell-on rallies is the strategy that should be used in. For MCX prices, I'm expecting if prices sustain below this current levels, below 27,000, it could come down to 26. If prices sustain below 26,500, it can come down to 26,000 within next 2-3 days. And for even silver, if it sustains below 36,000 level, it can come down to 35,500 and 35,000. So overall, sell-on rallies is the view.
Renisha, you obviously also observe global trends very closely. The global prices are down almost 7% in the last 1 month. Now, June 30th is the deadline for this negotiation between creditors and the government in Greece. The way positions seem to be unwinding in gold globally, does that also give you a little bit of confidence that probably some kind of a solution is in the work? Because the big global hedge fund money clearly is not long on bullion ahead of this decision.
Yes, if you look at overall global situation, investors and market traders are sidelined before this event of 30th of June. Everybody is still waiting what would happen to Greece. And if you look at demand for gold, investment demand, physical demand, we haven't seen any good demand coming in from last 3-4 months. And in fact, if you look at ETF holdings, they are still trending lower and lower. So fundamentally, gold is looking bearish, and the support which it should get is only 1 point, that is if Greece defaults or if it exits from Eurozone. But that is very much unlikely that could happen. But we are not sure. So there are 50-50 chances. So the only factor that could support gold from here is Greece default or Greece exit. Otherwise, if Greece comes up with a deal or a solution to it, we would see gold prices sliding towards southward journey. And so to have a big positions, one should wait what is happening. Otherwise, for intraday traders, it is still advised to go short on every rally.
Renisha, just shift focus to crude oil prices. In fact, crude oil prices have been higher. One global data point which has been released is the US stockpiles. This month also, the stockpiles fell by almost 5 million barrels to 463 million barrels, slightly on the higher side. How are you looking at this particular data point getting absorbed by the markets?
So if you look at crude oil, it is in the range of 37.50 to 39.50 at MCX, and for NYMEX crude oil, the range is broadly $57.50 to $62 for WTI crude oil. So I think this range-bound movement would continue for a time being. Yes, we have seen there has been some drawdowns in inventories, but still inventories are at record high levels. This drawdowns has been seen due to higher utilization and refinery rate because of summer peak season, but I don't think these prices are sustainable at current levels. Overall fundamentals are still negative, so I'm expecting a breakdown to happen around $58. If prices sustain below it, it could go down to $55 also. So overall, my view is bearish for crude oil. I would expect it to sell around 38.20 levels for intraday for the targets of 37.60. But for positional traders, one should wait. Prices should give a breakdown or breakups from the range of 37.50 to 39.50. Then only big positions should be created. But for yes intraday, if 38.20 is broken at MCX, selling could be initiated for the targets of 37.60.
As we speak, that particular price is being negotiated. 38.22 is what crude MCX is trading at right now. Very quickly, Renisha, what are your thoughts on natural gas if you track that? Because we understand that two big supply waves are about to hit the global market. One, of course, from Australia and the other one from Middle East. If supply goes up again in natural gas, it could have an impact on the prices. How are you looking at natural gas?
See, I think natural gas prices are still trading in a range of 170 to 190 for a broader time, and overall, yes, this is a good demand season for natural gas in US, but we haven't seen prices rallying up above 190 levels. So overall, my view is sell on release. At current levels also, I would recommend to sell natural gas for the targets of 170 on downside.
All right, Renisha, we'll let you go on that one. Thanks a lot for joining us on the show today with your insights. In fact, with that, let's take a short break. On the other side of the break, we'll talk about currency trades. In fact, rupee ended slightly on the weaker side today, though the fund flows into the equities market also remain on the stronger side. We'll discuss the possible trades in that when we return.